Hey everybody, hello and good morning. My name is Darius Anucauskas and I'm Chief Market Analyst here at Markets.com. Look, Happy New Year, ladies and gentlemen. This is my first show this year. It's a great way to start the week, the new year, with a week with full of economic data sets. Look, we're going to dig into all that. We're going to talk markets as usual. Hopefully you can tune in into the live session. If not, well, feel free to watch this as a recorded session as well. But ladies and gentlemen, I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is the 7th of January 2026. I need to start learning how to say 2026 now instead of 2025. Got used to that for, it's always the case for every year, basically, when in the beginning of the year, you kind of feel all the time you have this, oh yeah, remember in that, it's like going to be like November 2025. Oops, sorry. 2025. No, 2026. Ladies and gentlemen, I want to welcome you into this new year. I know it's already like 7 days after the new year, but I haven't been online since then. But look, everybody, happy new year. I hope this year is going to bring us more action, which will be in our favor. Because the year has already started, with a lot of action, and it's the world is honestly, I kept on saying it throughout 2025, and I'm going to continue saying it probably throughout 2026, that it's crazy right now. So many things happening geopolitically, that, oh my God. I think everybody has gone nuts, but hey, these are the realities of our days, and I think that every generation goes through some sort of like stuff like that, where geopolitics are just, it keeps us running, keeps us heavily involved all the time. We cannot really switch off and relax. Nope, we always have to be careful. We have to watch out everything. When we have to, basically, we always have to have risk management in our lives. Anyway, ladies and gentlemen, we'll talk markets. We'll talk economic data. The usual stuff that we cover here. I hope you can hear me and see me well. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I'm going to put my usual good morning in the chat room, ladies and gentlemen. Good morning. Yep, there we go. Good morning, everyone. So, ladies and gentlemen, I hope, like I said, I hope you had so far a good start of the week. Also, before we go any further, as always, let's quickly have a read through our actually mentioning, not a read through, but a mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's take a look at the economic calendar. And because I'm starting this week today, 2 days have already passed, and basically we had already 2 days of economic data sets. So look, from Monday we got the big numbers came out from Japan. We had the S&P Global Manufacturing final PMI. For some reason there is no data for, I don't know why, but let me just refresh the page. Maybe it will pop out. No, but then rating dog services PMIs from China as well are missing. Retail sales from Switzerland, there we go, 2.3 came out a little bit better than the previous, but worse than the forecast. BOE consumer credit, nothing major here on Monday. ISM, US ISM manufacturing PMI. Now that's important. It dropped, and it continues to remain in contraction territory. So for the U.S., that's of course not the best news. Of course, it has been like this for quite a while. To be honest, actually, let me just double check for how long we have stayed in below 50. So last time it was above 50 was back in February of 2025. Wow, that's like, that's a lot. So that says a lot about the country's kind of manufacturing sector. So certainly, I mean, it's an interesting. I mean, they're trying. Most likely, they're trying. To get themselves out of it. But yeah, certainly, the manufacturing sector in the U.S. is at a critical spot. Um, Maybe cheaper oil from Venezuela will help them out. I don't know, like you know. Yeah, that's another topic. Anyway, so look. What can I say? We got the numbers. They're on the lower side. I don't know when they're going to get back above 50, so we'll have to wait and see. Going into Tuesday, during Tuesday, on Tuesday, there we go, and found the correct word. S&P Global Composite and Services PMI from Australia, again, missing for some reason. Let me double check the economic calendar. What's happening here with TradingView? Is this correct or is this not correct? Let me just double check. So Japanese manufacturing PMI came out actually at 50. So it jumped. Why is it not? Why TradingView is not updated? Okay. Anyway, Japanese S&P Global Manufacturing PMI final number came out at 50. So basically jumping back into contraction. Expansion. Well, bang on flat actually. But it's one step away from getting back into expansion territory. However, if you're a pessimist, then you can say one step, one step to get back into contraction. Anyway, long story short, the ones that are not in contraction, the ones that are in expansion, are actually the services and composite PMIs from China. Those are well above 50 still, so that's good. Look, okay, going back to the situation here with Australia's numbers. Let me double check if I'm missing something here or something. Yeah, I think they didn't come out. No, sorry, they did come out. What's wrong here? Everything is all over the place, honestly. Like what's happening here anyway? Look, S&P Global Composite and Services PMIs from Australia. Those came out on the lower side, from what I understand here. The previous was the composite previous was 52.6, came out at 51. Yep, everything is on the lower. Look, everything is on the lower side, but at least it's still in expansion territory. So hey, the glass is still half full. Going further down the line, what did we get else from the Eurozone? Okay, HCOB, Composite and Services PMI numbers from Europe. Okay, lower European Eurozone overall, still on the lower side. Okay, not very good. Then we got some numbers here from inflation numbers from Germany on the lower side. Okay, so the ECB is going to be very happy probably. S&P Global Composite and Services PMIs from Canada, better numbers. No, now Canadian economy is, what's interesting, is very resilient to the fact that the oil is on the lower side. I think that what they're trying to do is basically right now in the U.S. that they're trying to kind of drop the oil as much as possible. Basically, like this whole invasion of Venezuela. That of course is now sparking some rumors that what's going to happen, well, how everything is going to go, because again this is a little bit unlawful, I would say. Again, in terms of when one country invades, then it's wrong, but then the other country invades, that's okay. So go figure, right? So so nobody cares about the UN anymore. In my opinion, it seems like everything has lost credibility. It's all about money. It's all about money. Look, with the new oil that probably is going to hit the market from Venezuela, I think it's going to have its pressure on the market, on the oil market, and the prices in a way theoretically should go down. I'll jump into oil in a bit, but yeah, I'll pick up on that topic. Let's finish off with the data, with the economic data first. So the U.S. Composite and Services PMIs came out Okay, on the lower side as well, so not everything is very great here. Okay, going into today, right? New day, new start, right? Australia's CPI numbers. Okay, let's have a look. Year-on-year inflation number, 3.4 against the 3.8 previous. That's interesting. Everything is on the lower side. RBA trimmed mean year-on-year. Everything is on the lower side. Okay, interesting. Japan, composite and services, lower. Everything's lower. Germany to the downside. Right. Okay. Germany's unemployment rate is coming up today, so keep your eyes on that if you are trading something euro related. European Eurozone inflation number, the flash numbers, not the final ones, but the flash. Again, the expectation is on the lower side. Let's see if that's going to happen. Most likely, following the trend, it seems like yeah, it could be. Okay, let's not forget that we are in a very interesting week right now. We are basically picking up on jobs, U.S. jobs. So we know that it's a big driving force, a market driving force. So the first one to kick off will be the ADP, as I understand. Should be JOLTS maybe, but JOLTS, did we get JOLTS yesterday? No. Let's have a look at the schedule here. The job opening is Wednesday. Okay, so yeah, there should be coming out Wednesday as well. So basically, ADP is going to be the first one, from what I understand. And then it should be JOLTS. Yep, there we go. JOLTS are there. So first we're going to get ADP, employment change. So that's the monthly one, not the weekly one that we now constantly get, but the monthly one. So it's going to be very interesting. Previous number was at minus 32K. The current expectation is for a higher number. Right, look, most likely could be the case. I think that, yep, maybe December was something of a better month, in terms of employment. Because I think that there were a few, not much, but a few private, or short-term contracts that were given out. So look, we're expecting a number to go back to closer to 50. Okay, if we do get a number which is actually below this number, I think that it's still going to be seen as if it's still above, let's say if it's above zero but below 45K, I think that the market could still be worried. I think that that's not really going to be as helpful. Yes, great, it's not a negative number, but is it something to be very happy about? No, not really. So yes, the situation with tech, where everything is like booming in there. You have this other economy where everything is kind of a little bit going lower. So as they like to say now, like the K-shaped economy, right? Where tech is going higher, labor, is going to the downside. So we're watching this number very carefully today. I think it's going to be quite an action-filled day. We have factory orders coming out from the US later on, so that's currently expected to go out on the lower side. ISM Services PMI. Look, I'll say it this way. Whenever it's going to get closer to 50, I think that's going to be seen as a negative. IV PMI from Canada. Now, they're a little bit, like a few steps away from jumping back into expansion territory back above 50. But again, let's not get our hopes up too much. JOLTS, job openings, those are coming out. Look, with JOLTS, I would still, job openings and labor turnover survey. So I would still be careful with that because, look, I think it will take a bit of time for me to trust the BLS, the Bureau of Labor and Statistics of the US, because after this whole government shutdown that happened in October, it really damaged the reputation. And the fact that the data is collected not the most accurate way, and it's really not the most credible source right now, so that's why it's a little bit tricky. ADP, on the other hand, yes, it's a little bit of a different story. However, still a little bit of a better picture. Interesting how things change, right? Before, ADP was looked at like, just, one of those. But now ADP is actually, through this whole government shutdown period, I think ADP managed to shine and I think that was the strength of ADP. Let's see if if they continue to deliver accurate numbers. JOLTS. So yes, keeping an eye on that one. Current expectations on the lower side. So let's see what's going to happen there. Going into Thursday, we have the trade balance from Australia coming out. So if you are in trading something AUD related, then we're gonna get the European numbers and employment numbers, the Eurozone. So the economic sentiment, of course, consumer confidence. This is going to be quite interesting to watch, observe, how it's shaping up in there. But then we're going further. We have the initial and continuous jobless claims. We should be getting that. Let me just double check again. At least this is what's sitting on the calendar. Yep, continuing and initial jobless claims. But I think that the whole spotlight will fall on Friday. On Friday, we're gonna get the straight, ignoring everything else, straight in here. Non-farm payrolls. There we go. 55K expectation against the previous 64K. I'm not going to be surprised if suddenly we get like some sort of like a fantastic number. Again, I think at this point the numbers are not the most credible. It's a market. Is it a market mover still? Yes, it is. But are they, very accurate? I'm really curious what's going to happen with the previous number, with the 64K. How much it will get adjusted, because look, we know that there is a history of adjusting the number, and it's actually sometimes the adjustment is the market mover than the actual figure. So yeah, look at this trajectory right now. So we have recovered from this negative number here, which was recorded, by the way, and although they might say that, oh, the November number was like shady, and we don't really know what's going to happen, what happened there. Sorry, not November, because this one's going to be December number. Let me just go back into let me just confirm everything here. Yes, this is going to be December. So the October number was in the negative zone, and yeah, that was all over the place. So this is what I'm looking at here. So this big drop here, this was the kind of the surprise. And normally you would say it should be a market mover, but everybody kind of like, yeah, that's October. Like, yeah, we were closed then. Yeah, we fired a lot of people. Yeah. So that's what I'm saying. So it's like, the way they're going to present it, and that's why they presented it in this form, but also at the same time they presented it in November numbers. Like, oh my God, look how great that is. Look, at this point, given that we are still feeling the shakeup of this whole government shutdown in last year, at the end of last year, I think we need to be very careful with the Bureau of Labor and Statistics numbers for now. I think, in my understanding, I think maybe another year at least has to pass in order for us to kind of start, maybe trusting the numbers, or we need to see some sort of like significant changes maybe in the market, or in the way they approach the calculations that, not the calculations, the data collection, how they approach those and how approach that. And I think that's where the tricky bit is. Look, long story short, going further in terms of economic data on Friday, before the NFPs, we're getting some numbers from Japan and from China, so keep your eyes on those. This is quite important. Trade balance, German trade balance, which is going to be quite interesting as well. And yeah, that's kind of it. So look, it is an eventful week. Let's see what's happening with the stock market right now. Look, in general, the stock market has been enjoying itself lately. Looking at Nikkei here, you can see that it's pushing nicely to the upside here, but the hold-up happened. It happened near this 52,636 zone, which is basically the current all-time high. Now, I talked about it. I said to you before that this is the area that I'm going to aim for if we do get a pop above this 51,000 zone. There we go, mission accomplished. So now the next stop for me is this. If we get a clearance of this 52,600, kind of let's round it up here a little bit, 52,640, if we clear that, I will go higher. As more important, if we stay above that, if we stay above that hurdle, then yes, I'm going to go higher into the uncharted territory. For now, I'm being very careful because we have some shakeups. Yes, the tech industry right now is kind of driving. It kind of seems like helping to drive the markets higher. Um, my opinion that a lot of things are way too over inflated. It's way too much speculation. It doesn't really show the real economy, in my opinion, because I think that there are issues in the real economy. Anyway, I'm approaching this right now from the technical perspective, not trying to complicate my life way too much. But look, I will say it this way. If we do fall back below the 51,000 zone, I'm going to lean towards the downside. All this area right here, I'm going to leave it. I'm going to leave it and I'll allow the market to walk around here a little bit and kind of just decide what it wants to do. Shanghai Composite, this one is booming, boom to the upside, ladies and gentlemen. Not an all-time high, no, we're still far away from that, but still a good result. Look at this, good rally here. So far so good, but certainly we cleared the 2025 highest point, yep, and we are now, kind of traveling to that 4,100 zone. We kind of already did, to be honest, almost hit that level. Look, I think that further upside is possible as long as we stay above the 4,000 territory. If we start falling somewhere below the 4,000, then I think that even at 4,034, actually, if we start falling below that, I think that there is a chance of a larger correction back down. Let's jump into Dow Jones Industrial Average, ladies and gentlemen. So, okay, yesterday, a new all-time high. Looking at the cash index right now, we did establish a new all-time high today as well, this morning. Like, the futures were moving. But anyway, that's why I'm looking at the this chart here, when the markets are still closed. So these candles do represent every move that happened during the trading hours, not after or before. So at the moment, what I'm seeing is that yes, we cleared the previous all-time high. We did that on Monday. We cleared the 48,886, and it seems like we really want to test that 50,000 zone. Now the question is this going to happen today, or is this going to happen, let's say, or never, basically? So it's becoming very obvious that the market does want to test the 50,000 zone. But to me, whenever I see something like very straightforward and obvious, well, it kind of you have to take everything with a pinch of salt. We have to understand that everybody sees that, and probably there are a lot of traders who are kind of long right now, right? And they're like aiming for that 50,000, and then they're going to say, oh, I'm going to take my profits around there. Well, what's stopping the market to just kind of, hit the 49,000 and a half, 49,000 and a half, and just kind of stick there, and stick around there and then reverse back down. So again, like I said, you need to take everything with a pinch of salt. When something becomes way too obvious, that's where you need to be cautious. At the moment, the cash index is trading at around 49,000, kind of a little bit above 500. So above 49,500. Let's see where we're going to open up today. The European market, which I'll jump in a bit, is somewhat flat-ish, but like I said, I'll jump into that in a bit. The S&P 500, look at this beautiful thing here. After we created a new all-time high at the end of December. We hit the barrier right here, the 6,945, well, almost 46. The market yesterday decided, hey, you know what? Let's create a new all-time high. And that's quite interesting. So we're now like trying to go further north. Look, I am one of those people, one of those persons, that I believe in the fact that whenever the top three U.S. indices, the Dow, the S&P, and NASDAQ, whenever let's say two of them go and hit new all-time high, the third one needs to do the catch-up game. So and eventually it does hit, the all-time high. So that means that maybe there is still more room for some higher levels on the Dow and the S&P. Because why? Because Nasdaq is kind of lagging. It does want to go higher. At least it shows me the willingness to do so. Let's see if they're going to have enough power. But certainly, yes, it needs to overcome the 26,182, and that's not a small step. That is a move that still has to be done, right? And look at this. I mean, it's doable. Don't get me wrong, but look, I will say it this way: that if we somehow fail to reach the all-time high here on Nasdaq 100, to me that would be a worrying sign. To me, that would show, as always, it would show that hey, Dow and the S&P managed to reach the all-time high, but the Nasdaq, what? If everything is around technology, what's the problem for Nasdaq to reach an all-time high if Dow and the S&P did that? That's, like I said, that's where the question arises in my head. Like, if, like I said, if everything is okay with technology, then it should be easy peasy, right? But no, unfortunately. Anyway, long story short, ladies and gentlemen, for now, we're watching this one carefully. From the technical perspective, it needs to overcome maybe a little short-term downside line right here. Let me just double check where is Nasdaq right now. It's currently trading at around 25,590, a little bit below where it closed yesterday. So, yep, okay. Watching it very carefully, very cautiously. So yeah, look, don't get me wrong, there is still a chance. Maybe it'll rally today, and everybody will live happily ever after in the bull field. But certainly, this little downside line, we need to overcome it in order to go further north. Let's jump into DAX. All-time high on the DAX, 25,000. There we go. We're hitting that today, and well, what can I say? We came close to hitting that level yesterday. Didn't have enough steam. There we go. We're doing that today. Question is, what's going to happen next? Is this going to stay like this today? And for example, tomorrow, maybe, look, I'll give you a hypothetical scenario. Let's say we see this happening today, right? This candle jumping, like creating this gap here. This candle, let's say today, DAX remains flat. The US opens up. Maybe we'll see a little bit of profit taking on the, on the Dow, on the S&P, and this will DAX will be closed during that time. But then the futures will continue moving lower, and then tomorrow we see an open somewhere around here. So this to me would signal an island reversal. Let me just show you what I'm talking about. There we go. So this would, to me, like I said, it would signal something like an island reversal, where it doesn't have to be only like one candle basically or something like that. No, it can be like a series of candles. But let me just show you what I'm talking about. Just Googled it in order to show you. So basically, when bullish island reversal and like bearish island reversal, so you have this, because again, you don't know here, is it like a daily chart, or is it like a a 1 hour chart, or like a 4 hour chart, something like that. So that's why it's unclear. So it's basically when you have a cluster, or a cluster of candles which are detached in a way from the previous candles and then from the other candles. Basically, when there is a gap like this, where you can see like a straightforward gap, initially it opened much higher, traded a little bit, and then kind of next day it closed, and then next day it closed, and then next day it opened lower with a gap to the downside. So initially it's the gap to the upside, and then after some trading there's a gap to the downside, and this like kind of separation from the rest, that's kind of what makes it like an island reversal, and that's in trade, and that's in technical analysis. So long story short, this is, like I said, that's why I'm being very careful right now, being very cautious, and it could be quite interesting. I hope it's going to be interesting because look, I mean, this to me, this is like okay, you can go higher a little bit more, but then again, is everything that good in Europe? Nah, no, I don't know. I don't think so. The FTSE 100. Let's have a look at this one. After creating a new all-time high yesterday, there we go. A little bit of retracement to the downside. I will say it this way. Look, ladies and gentlemen, whenever we hit new all-time highs, I think it's just better to wait. Keep an eye on the current all-time high, and just wait for clearance of down because it's very difficult to trade these scenarios, these situations here. And finally, from the indices, the US dollar. Now, the US dollar, I have really mixed feelings for that one. On one hand, from the fundamental side, on one hand, you have a very much devalued currency, right? Like, which in a way, dollars, is a currency that is used in transactions all around the world. However, because of the geopolitics, some major economies are shifting away from using the US dollar. And this is where the US dollar, US is kind of getting annoyed, right? Because it's losing its dominance in that sense. So, which I think is just normal market reaction to what you do. And look, I would say it this way, that it's I think that they don't want to really get rid of the influence, and they don't really want the US dollar to lose its kind of significance. So that's why they're trying different methods going all around. Dirty, not dirty, well, it's another topic. But long story short, for now, the US dollar seems to be kind of on the weaker side against other major economies and other major currencies. And this is what I said to you previously in my previous shows, that at the moment, I think that they need a weaker dollar, just because they need to make their exports look more attractive on the global arena, and also to make for the US importers to make it more expensive to import from other countries. So so that you would use more US produced stuff. Anyway, is that going to backfire? In my opinion, yes, because let's face it, every region in the world is known for doing something specifically good, and honestly, you can try to replicate it as much as you want. You have to accept the fact we need each other. You need that wine, you need those natural resources, right? So you need that food, and you like chocolate. You have to be, you can't grow chocolate, cocoa in your country, because, well, it's impossible. You have to grow it in there, in a certain hemisphere. That's what I'm saying. So it's like, we can talk about protectionism as much as we want. I don't think that it's ever gonna happen. It will happen in one way or another, don't get me wrong, but in terms of like substituting something purely, then yeah, that's impossible. You need those good trade relations with those countries. So it's not going to happen if you're going around doing whatever you want in the world. So anyway, long story short, looking at DXY, like I said, for me the problem is that I think that they still need a cheaper dollar, and I think that there is still potential for the US dollar to drift lower. Now we're at a very interesting spot here right now on the daily chart. We're near the 50 and the 100-day EMAs. So if those hold, another decline could be possible. Let's jump into the currency world, ladies and gentlemen. AUDUSD, ladies and gentlemen, look at this good move here. Beautiful. Everything is fine right now, and I think that this is, it could continue moving higher. Let me just get rid of everything, all the drawings, and have a fresh look. My only problem here with AUDUSD is that I don't know if it's making us forming something of a nice rising veg pattern. If it is, well, then the drill. It could end up breaking lower, but again, a confirmation break is needed. So we're not in a rush, to do anything here, but because like I said, is it a rising veg, or is it just like a coincidence that is forming something spiky like that? Because look, we have a good target in a way. Where's that little horizontal ray? We have a good target right here. There we go. Let me just grab it. There we go. 0.6937. It's an interesting target. So it's it's like I said, there are some good levels here. There are some good levels, and if we believe in the weaker US dollar, then certainly there is a chance of a kind of a move to the upside here on AUDUSD. That said, let's see exactly. Let's not rush into conclusions yet. First, let's see if this is going to be the case. AUDNZD, just a quick glance. Beautiful clearance here. I talked about this before New Year. I talked about this hurdle here, the 1.1636. Beautiful move test. There we go. Tick. Now the next question is, can we go further? As long as we stay above the 1.1636, I will continue targeting the upside. AUDJPY. So okay, risk on is currently on. Because our pair risk, which is showing us risk on, risk off environment, AUDJPY continues to show us good movement to the upside. That said, look at this. We had a move in July here after such a strong move higher, and I think that let's not forget about the Bank of Japan. Okay, I mean in light of all these tensions, these economic political tensions, we're slowly starting to forget about central banks, because at the moment everybody's talking about how how US excuse me, how US wants to conquer this land, that land, so, and that's fine with everybody else, to be honest. I mean, that's like, wow, that's okay. So if somebody else does it, that's wrong, but if they do it, that's correct. So you want to steal the land, you want to steal the resources from those lands. Actually, maybe you don't need the land as much, you need the resources. So and that's where it's going to be quite interesting to see what's going to happen here with AUDJPY, because if Bank of Japan steps in with their hikes, because this is what they want to do, they want to continue hiking, then yes, great. That's where this is where the Japanese yen could become a little bit stronger. So look, long story short, for now, do not exclude exclude the idea that the Japanese yen could get stronger. Look, it will happen. It will happen when the markets will start turning sour. So for now, they have not turned sour. So that's why we're being very, very careful for now. Anyway, I can see that there's Ariana Dill. Hi, thank you very much for your comment. Too bad I have no clue what you're saying. Sorry, no, but thank you very much. If you can, respond in English, that would be great. But anyway, thank you very much for your comment. I really appreciate that. Long story short, for now with the pairs here, look, for me the ones that is interesting, that's becoming quite interesting, is the Japanese yen, purely because when the time's going to turn sour, the Japanese yen will pick up and will pick up strength, and also the fact that the BOJ is on this path now where they're going to be hiking rates. That's going to be amazing, like that theoretically should be amazing for the Japanese yen bulls. But again, let's see. Let's not rush into conclusion yet, okay? Let's jump into EURUSD very quickly, ladies and gentlemen. I mean, look at this. I talked about this before New Year, and what can I say? For now, we are moving in the upwards direction, despite the little correction lower. However, look, we found good resistance near here, near this barrier, this 1.1788, or okay, we can say the 1.18 in a way. So I think that that could be the more accurate approach, but this 1.18 zone, 1.1810, something like that, I think that's a good target, approximately around there. And if you're looking for some from some higher levels, then certainly wait for a push above the 1.1810, and then we can go from there. If we can get a clearance of the 1.1810, then great, wonderful, more buyers could join in. For now, I'm keeping an eye on this downside line. If this downside line continues to provide resistance, then yeah, we could see a reversal back down. However, we still have some room towards that downside line. So I'm kind of considering a little bit of a move out higher. For me to get bearish on this one, I think I need to see I need to take a very conservative approach here, and I'm going to wait for a break of this little short-term upside line here, which is drawn basically from the low of the 2nd of June, or should I say probably the lowest point of June, isn't it? No, that's not the lowest point of June. The lowest point of June, yeah, actually, sorry, it is the lowest point of June. So yeah, good upside line. I think clearance of that one is needed, because again, at the same time, you could get also a drop below all the EMAs on this daily chart. EUROJPY. Beautiful move back down. Beautiful move back down. Yes, where it seems like it wants to go lower a little bit, but I'm not rushing into conclusion yet, because again, I think that there could be some more upside to come. Just unless, like I said, unless the market is ready to reverse back to the downside. But again, I'm currently struggling to find logic for that one. Unless it's major profit taking, and unless maybe the job numbers this week will help the stock market to to kind of correct back down. Let's see. Ladies and gentlemen, let's jump into GBPUSD. Let's jump into GBPUSD, and for now, looking at this picture here, well, okay, this is a daily chart, and we're seeing a little bit of correction to the downside right now. After hitting a new high for this year, a new high for this year near the 1.3568, I think this is the barrier. This becomes the barrier which we need to watch out for. If we clear that, if we clear this highest point of this year, the current highest point of this year, it's nice and easy to talk about in the beginning of the year when you see it, something like this happening, a new high for the year. Yeah, that sounds good. So it seems like a little bit. It seems like more significant than anything else. But look, then we have this little downside line which we need to overcome. This one's taken from the highest point of July, or I should say the highest point of 2025. If we clear this downside line, then great. Okay, I'll go to the upside. I'll go further north. But at the moment, I am being very careful, and I'm not rushing into anything. Unless I see a clearance of this little territory right here, this 1.34 zone. A drop below that could attract a few more sellers into the game here. GBPJPY, this one had a good rate run, and look at this. Okay, to me, this looks a little bit more bearish, but I don't want to rush into things again as well. I will probably wait for a break of this little upside line. And let's not forget, maybe, just maybe, this is actually a rising channel. Okay. This could be a rising channel. Could be seen as a rising channel. And if that's the case, then we're waiting for a clearance of one of the sides. When we get that, then I'll do something about it. But at this point, I'm just observing the price action, because again, way too tempting for either of the sides to jump in right now. However, I have to say that while we remain inside the pattern, it should be moving in the direction of the pattern. However, if we start clearing one of the sides of the pattern, no, that's when the excitement could come in, and we could see some nice action, outside of the pattern when we break one of the sides. Let's see if that's going to happen. Going further down the line, ladies and gentlemen, let's have a look at what's happening with the USDCAD. Actually, I like this pair, I really do, and well, I have to say that this is a current interesting moment where where oil is a little bit on the lower side. And we're seeing a little bit of weakness of in Canadian dollar now, because again also these talks that there are going to be more oil, more Venezuelan oil jumping into the market. Uh, that's where the interesting bit comes in. That's where we could see oversupply, and because demand right now is on the lower side, nevertheless, we knew that when OPEC was increasing, when they kept on increasing production despite the lower demand. Imagine this now. In addition to that, you have, excuse me, just naturally more oil because a new market has opened up, meaning that all these oil giants, and I'm talking about not companies, I'm talking about countries, if their economy really depends on oil sales and oil price, these economies should suffer a little bit, in my opinion. So you need to be careful with that. So long story short, for now, I would say be careful, be cautious. Let's see, let's see what's going to happen geopolitically, because if we see more oil coming in, I think we could see Canadian dollar getting weaker a little bit more. USDJPY, looking at the picture here, yes, a great move, great stuff so far. So good still, on the higher side. Look, I talked about this. I said that if we do break this downside line, I'm going to aim for this 157.89. Well, there we go. We made that move. Now, again, if we continue to trade above the 20-day SMA within my Bollinger Band here, I will continue targeting that 157.89, and then we'll take it from there. USDCHF, this one's trying to make its way back up. Interesting, very, very interesting. Let's see what's happening here. So, okay, looking good, looking quite interesting, looking for some higher levels, and look at this, we couldn't reach the lowest point of 2025, and we started reversing a little bit earlier to the upside. So that happened at the end of the year of 2025, basically Christmas time. We saw major reversals after Christmas, and it seems like it wants to go a little bit higher. I think it could do that. I think it could make its way a little bit higher towards this downside line taken from the highest point of November of last year, and I think it could fill up this little gap, and then we'll have to take it from there, because if it doesn't, if it's going to struggle to go and break this downside line, then yeah, we'll have to consider the downside again. Ladies and gentlemen, let's jump into the commodity world. Okay, I want to have a fresh look. I want to remove all drawings here, and I want to look at the monthly chart. Insane. This is insane. After we got a major breakout here, we reached an all-time high back in 2020 when we reached that little bit above 2,000, and everybody was going crazy, like, wow, 2,000, that was like, a major number. We cleared that, and it just went hyperbolic, parabolic. I mean, look at the steepness of this. Look at this. We had a problem like this back in the 80s. It also, there was a crisis. I mean, some of you probably won't remember. I don't remember. I wasn't born then yet, but still, there was a big financial crisis, oil crisis, and yeah, we then sold off. We sold off heavily, and that's why I am being very careful here, because look at this. It is tempting, yes, gold could continue rallying. I think everybody's talking about 5,000. I mean, okay, let's be realistic, okay? I mean, I said it before, and I'll continue saying, that it is a way too overstretched. And, as I keep on saying this, gold continues to rally. So, but doesn't matter for me. Honestly, I do still believe that it is, at this point, it's always the case. Am I buying at the peak? Yes, it might go a little bit higher, but I never know. I don't know, am I buying it at the peak? If you're in this game for the very long term, let's say for, like next 20, 30 years, then okay, maybe this is normal price, But if you're in this game, let's say a little bit shorter term like me, then to me, like to say to buy here, I would say I don't know, because again, maybe, yeah, maybe it could go further upside, maybe. But will is it true? Is it going to be the case here? So am I not buying at the peak? 4,500, that is already quite a decent number. Yes, everybody wants that 5,000 now because of, greed is the essence of a human being. But at the moment, I would say this way: this is the high of last month, 4,550. Beautiful number. Let's see if we can overcome that. Because I don't want to rush into conclusion yet, but certainly, we need to overcome this hurdle first before examining higher levels. Did we have already quite a strong rally apart from this little month here when it was kind of in slightly negative territory? That was in July of last year. But since January of 2025, we kept on just rallying like crazy. You need a breathing month. You need a breathing month, and I don't know if this is going to be it, but certainly for me, this is not tempting. This is like when I'm looking at the month, I don't even want to watch the daily chart no more on certain instruments like gold and silver. I'll jump into silver in a bit. This to me is actually now the short term, chart. Like if somebody looks at it from the 15-minute perspective or the 30-minute perspective, this doesn't paint me the picture anymore. The monthly chart paints me the picture on instruments which have a similar parabolic move. And this concerns most of the precious metals. So, long story short, what am I doing here right now? I'm watching the current all-time high. If we clear the current all-time high, then yeah, okay, I'll consider a move to the upside. But if we don't, look, I don't know, honestly, like this is a very tricky moment I mean, looking at silver as well, look at this. Great run. I have 2025 here because I was comparing years. 1980, we had a major spike like that. 2011, another major spike. And 2025, look at this hyperbolic move, honestly, a parabolic move. I mean, for now, I would say this way. For now, I'm just observing the price action, and I'm not really doing anything here. I'm just observing. Yes, I'm just looking at this, and just a second. Yeah, I'm just kind of like I said, not hyperbolic. What am I talking about? Parabolic move. Honestly, math. Look, kind of stunned there a little bit, stalled there a little bit. For now, let's put it this way. For now, my simple approach to this is that yes, do I see gold and silver as a store of value? Yes, I do. Do I see it as a good price right now to purchase? No, because I do believe I'm going to be that party pooper that's going to believe, and I'm going to continue saying that it cannot drag like this because just purely based on previous experience. In the short run, maybe for another year, it could just continue rallying, pushing higher, and that's it. So congratulations to all. But I really don't know. I mean, this is just killing all the logic, because at the moment everything is this tech related, and yes, silver is used in technology, and we're right now booming everywhere. Eventually, it will slow down. If people have no jobs, then who are you? The countries will have to support people in order to justify the fact that they're losing their jobs to AI. And certainly, don't get me wrong, I'm not against AI or anything. No, it's going to be a shift towards other jobs and everything, certainly. But still, the first shock will be that everybody will be, out of job because AI has simplified the process and made it more efficient. So the companies now can sell their products and services to everybody, at a lower cost. But to whom you're going to sell that? To those people who have no money, or some businesses that are running out of business. That's my problem. So, and then again, this is where this turnaround could happen. So, is it going to happen anytime soon? I really don't know. But certainly, to me, this parabolic move. It's just insane. It's really looks very unlogical and or sorry, not unlogical. No, everything is logical, but it's overstretched. Very simple. Platinum, I'm not going to jump in and even to daily charts on metals right now, just because there's no point. Platinum, look at this. New all-time highs last month, this month, now we're seeing a little bit of reversal back down. Look, if we're going to stay somehow below the 2008 high, and by the way, remember what happened here, a bit of a financial crisis, right? If we also rallied significantly like crazy, and then we sold off because the financial economy, the economy just collapsed. So are we going to see something like that happening right now? Well, I don't want to be, like I said, on the the party pooper or anything, but certainly this is something to watch out for. Because again, these metals are giving us signs that are wow. Only palladium is the one that I'm kind of okay with. I talked about palladium a while ago when we were still here, and this 1000 and a 200, 250 level. I talked a lot about that. I said if we're going to clear this hurdle, boom, this could open the door to some higher levels. There we go. We had a nice clearance, and by the way, this move is actually seen as a retracement, after, having a major decline here. Look at this, 38.2, we did that. We did 38.2, and well, the question is now, can we drift back down? Look, if it falls back somewhere, ideally, if it falls back to the 1,250 zone, that could be a nice good area. But I do accept that, if it falls back here to 23.6, somewhere around the 1,450 zone, I think it could be an interesting option to consider. However, depends on the market. Yes, but that's palladium. Copper, again, all-time highs. This is just unstoppable. It's continuing to rally, and we understand why. Because technology is driving it. So, well, we need to see technology, the tech sector, kind of reversing course a little bit. But at the moment, NVIDIA is the driving force. Well, everybody's on this hype. Let's see what's going to happen next. Let's jump into sugar, my beloved sugar. And this one, I need a daily chart for this one. And look at this. It's a little bit of a roller coaster ride here. Let's remove all the drawings. And look, I'll just keep it simple. If we do pop above the 15.34, I'll go to the upside, because at the same time, we'll clear the 100-day EMA here on my daily chart, shown as the blue line. Let's jump into oil, of course. The topic number one right now in the world, and I will remain bearish. You know what? I will say I will remain bearish on the oil price, because I do believe that there's going to be more supply hitting the market. So let's face it, if you think that if it stopped falling, or if it stopped moving in one direction, it will move a little bit more. This is the great phrase that I heard from Mr. Australian, one of the Australian investors and popular investors, Richard Farley. I heard him saying once, if you think that if security stopped moving in that one direction, when you start thinking about that, then it will move a little bit more, and then it will reverse. So it's something like that. So yeah, it actually kind of works a little bit. It works from what I understand, what I apply in my daily life. So anyway, long story short, for now, oil, I'm watching that $55 mark. If we clear that, yep, I'm going lower. Brent oil, similar story. I am watching this 58.44 zone-ish, something like that. That's the lowest point of 2025. A nice good clearance of that area could open the door to some lower levels. Natural gas. Ooh, look at this. We reached one of my targets here. There we go. This upside line, I talked about this. There we go. Amazing. 3.5 right now we're currently sitting at. But look, if we break this upside line, I think that, yeah, more sellers could join in. But I will say it this way, that for now it's on a very steep decline, and certainly there's no major retracement in sight. However, I'm not giving up on natural gas, but I think that it had its moment, went all the way to 5.5 here, and then look at this, boom, to the downside, slashing $2. You know, wow, that's a lot. Percentage-wise, that is from this peak here all the way to here, it's like 36% that we have lost. Wow. So, long story short, I think the average price right now is somewhere around the $4 mark. So, it depends, of course, how you look at how you measure it. But if you measure it with the 50-day moving average EMA, then yes, it's around 4. Can it go back to 4? It can, but I'm not rushing into conclusion yet. And ladies and gentlemen, for dessert, ladies and gentlemen, Bitcoin. So we're seeing a nice move here in general in the crypto world. We had a great push back above the $90 mark, $90,000 mark, and I talked about this before. So hey, for me at this point, I will say this way: this is what I'm looking at. This is what I'm keeping an eye on. If we do drop back, you know, towards the 50-day EMA shown here as the green line, that's roughly around the 91,750. If we, you know, test this area but fail to stay below it, then yes, I'm considering a move to the upside. If you're a little bit on the careful side, you can just keep an eye on this barrier, this 94,589. If we clear that, then yes, great, more buyers could join in. Bitcoin Cash. I'm loving this one. 650, we briefly cleared that area. I like this one. We failed to stay above that area on the weekly. This is a good view here. The weekly candles. You see, we had these false breakouts, but at the end of the week, we still failed to remain above that $650 mark. Look, this is my barrier. I talked about this for a while, and this is what I'm going to be watching. If we can get a nice clearance of that 650, then yes, great, I'm going to go further north. Ripple is ripping nicely here to the upside. Look, I talked about this here. Remember, I said keep your eyes on this 1.1990. If we do pop back above it, I'm going to go higher. My next target will be this downside line. There we go. Boom, to the upside. Nice, beautiful test right here. Ethereum. Oh, by the way, what's next for Ripple? I'm just observing this one, but if it starts breaking this downside line, which is taken from the highest point the high of the 21st of July of last year, then yes, great. I'm going to go to the upside towards this other downside line, which is drawn from the high of the 8th of August of 2025. Look, all these lines are tentative, don't get me wrong, but so far they're doing a good job in providing good resistance. Very quickly on Ethereum. Ethereum also moving nicely to the upside, of course comfortably back above the 3,000 zone. So let's see if we can reach this area right here near the 3,450 zone right here. Litecoin, my beloved Litecoin, pushing higher. Yes, great, pushed back above the $80 mark, and so far so good. Let's see what's going to happen here next. But for now, yes, certainly it's the 87.83 zone is something that I'm watching. Dogecoin is at an interesting spot here as well, moving higher together with other cryptos. So I think that the 100-day EMA could be the next one, and then we'll aim for the 50-day EMA. Polkadot, very quickly, yep, continues nicely pushing back above that psychological 2 level near a key area of resistance right now. Let's see if we can break this downside line. And finally, Tron also looking good. Look at this, looking good, looking quite positive. Let's see if we can clear the 0.2955 zone. If we can, amazing. More buyers here could join in, and then we could target the area around here near the 0.3012, and then we'll take it from there. Look, Tron is not the biggest kind of mover in general, but certainly it does move. To me, it looks like a currency, and I said it several times already, so I think that Tron is going to be one of those that's just going to transition into maybe a currency pair. Anyway, long story short, ladies and gentlemen, thank you very much for watching, listening. I hope you found this one useful. Thank you for watching this till the end. I really appreciate your time. So join me on Friday on the NFP day, and yeah, we'll look at what happened today. We'll look at what happened on Thursday. So, ladies and gentlemen, join me on Friday. For now, have a beautiful trading day. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you on Friday. Bye bye.